Hey everyone, and welcome back to our deep dive. We're diving into Bill Cara's Navigator Report 8. Huge thank you to Bill for all of his amazing work as always. Be sure to check out his website, billcara.com, for more. Okay, so this report, it covers the week leading up to March 1st and 2nd, 2025. And let me tell you, it's packed with insights. It kind of paints a different picture than that resilient economy narrative
Absolutely.
we often hear these days.
Yeah.
So we're going deep on this one, folks. We're assuming you're already pretty comfortable with financial markets. We're going to go straight to the heart of what changed from last week and what you need to know to navigate this new landscape. And spoiler alert, tariffs are playing a huge role.
Yeah, right away, Bill dives into a bunch of major developments. That really sent shockwaves through the markets. First, we had the U.S. terminating its oil deal with Venezuela, which directly impacts Chevron's operations.
And then on top of that, you've got the Fed hinting at another potential rate hike in March.
Yeah.
Sending everyone scrambling to figure out what it means for bond yields.
Yeah.
And, financial stocks.
He specifically mentions the impact on big players like J.P. Morgan, Bank of America, and Goldman Sachs.
Right.
It's clear that these rate hikes are creating ripples across the entire sector.
And then amidst all of this, you've got Tesla issuing a massive recall, 100,000 vehicles, due to a software glitch.
Wow.
It really makes you wonder about the viability of, autonomous driving technology in the long run.
It does raise some questions about the pace of innovation.
Yeah.
And the potential risks involved.
Yeah.
But hey, it's not all doom and gloom. We did see U.S. inflation slow down a bit.
Oh, that's good.
Which is a positive development. But Bill points out that core inflation is still stubbornly high, making the Fed's decision-making process even more complicated.
Yeah, they're walking a tightrope, trying to control inflation without incurring a recession.
Exactly.
And here's where things get really interesting. The looming trade war with Canada.
This is where it gets fascinating. Bill argues that the U.S. justification for tariffs on Canadian lumber, specifically citing national security, seems pretty flimsy.
Yeah, it does.
He actually points out that past disputes were resolved through negotiations, not trade wars. So it makes you wonder, is there something else going on here?
It really makes you wonder what the agenda is. And the potential impact is huge. I mean, we're talking about a $900 billion trade relationship between the U.S. and Canada.
Yeah.
That's at stake.
Huge implications. Bill doesn't shy away from outlining the potential economic consequences, both positive and negative. He highlights the risk of GDP contraction and job losses.
Right.
Especially in sectors directly exposed to trade with Canada.
Of course. But what I found really interesting is his analysis of how this situation could actually create opportunities for investors who are paying attention.
Absolutely. He argues that some companies might actually benefit from reduced competition, leading to higher profits.
So even in times of uncertainty, there are always potential winners and losers.
All these sides to the coin.
Exactly. Bill doesn't stop there. He goes on to really dissect specific market movements and offers some pretty actionable advice for investors. For instance, he points out that the Dow 30 is holding up pretty well compared to other indexes, like the NASDAQ and S&P 500. Which are showing signs of weakness.
Interesting point.
What do you make of that?
Well, he suspects there might be some artificial support there from what he calls humongous bank and broker interventions.
Okay.
HB&B for short.
HBB. I like that.
Essentially, he's suggesting that these large financial institutions might be propping up the market, creating this false sense of security.
So it makes you question whether the market movements are truly reflecting the underlying economic reality.
Exactly. And he goes on to issue a bit of a warning, suggesting that a market crash is a real possibility, especially when you consider the bearish signals in the NASDAQ and S&P 500.
A sobering thought, but important to be prepared for all possibilities.
Be prepared. He urges investors to approach the market with a critical eye, think independently, and avoid blindly following the recommendations of large financial institutions.
You got to think for yourself.
Absolutely. And to help investors navigate this complex landscape, he provides 2 lists of stocks in his report.
Okay.
The 100 bellwether stocks and the Cara 100. Both lists focus on high-quality companies that he believes are worth considering.
So these are starting points for further research.
Exactly.
He's encouraging investors to do their own due diligence, make their own informed decisions.
Absolutely.
And speaking of making informed decisions, Bill has some pretty strong opinions about ETFs.
He does.
Doesn't he?
He's quite skeptical of ETFs and even uses a brilliant analogy to illustrate his point.
Okay, I like analogies.
He compares investing in an ETF to buying a bag of peaches or fish at the grocery store without inspecting each one individually.
I get it.
So with ETFs, you're essentially buying a prepackaged basket of companies, and you might not be getting the quality you're looking for.
You don't know what you're getting.
Right. He much prefers to carefully select individual stocks.
Makes sense.
After conducting his own thorough research, focusing on quality and buying at cyclical lows.
So it sounds like he's not completely against ETFs. He just uses them a little differently.
That's right. He outlines 6 key insights that he uses when analyzing ETFs.
Okay.
Focusing on understanding sector performance, assessing risk, gleaning thematic insights, making relative strength comparisons, understanding portfolio diversification, and identifying concentration risks.
He's gathering information from every possible source.
Exactly, to make the most informed decisions.
Before we move on to part 2, I want to touch on one more point. Bill highlights the fact that a surprisingly large number of mutual funds actually underperformed in 2024, which was a year of strong market gains.
And still charging those hefty management fees.
I know, it's crazy.
Despite their lackluster performance, makes you wonder if those fees are truly justified.
It really challenges the notion that you need a professional fund manager to achieve success in the markets.
Right. Bill seems to think that individual investors, armed with the right knowledge and tools, can outperform the so-called experts.
All right, so we've covered a lot of ground in this first part.
We did.
Geopolitical tensions, economic uncertainties, specific market movements, even Bill's take on ETFs and mutual funds. We'll dive even deeper into Bill's analysis in part 2.
That's good.
See you there.
Welcome back to our deep dive into Navigator Report 8.
Okay, so we talked about the big picture, but I'm really curious to hear what Bill has to say about specific sectors and industries, where the real opportunities might be hiding.
He doesn't disappoint there. In this report, he takes a close look at the energy sector, which makes sense, given all the geopolitical events we discussed earlier.
Right.
The U.S. canceling its oil deal with Venezuela really sent shockwaves through the global energy market.
And then you layer on that potential trade war with Canada, it seems like the entire energy landscape is shifting.
Exactly. But Bill sees potential bright spots amidst all this uncertainty.
Okay, I like that.
He points out that certain domestic energy companies in the U.S. might actually benefit from these tariffs.
Interesting.
Reduced competition could create opportunities for growth and increased profits.
So it's not all doom and gloom for the energy sector.
Not at all. There might be some real opportunities there.
What about precious metals? I always find that topic fascinating, especially during times of economic uncertainty.
Bill dedicates a significant portion of this report to precious metals, specifically gold and silver. He acknowledges their traditional appeal as safe haven assets, but he also cautions against assuming that they'll automatically perform well just because the market is shaky.
So there's more to it than just buying gold when you're worried about a crash.
Much more. He emphasizes that their performance is influenced by a complex interplay of factors, including industrial demand, inflation expectations, and even interest rates.
It's a reminder that there are no simple answers or guaranteed wins when it comes to investing.
No silver bullets.
You have to understand the bigger picture and all the forces at play.
Exactly.
Speaking of the bigger picture, Bill always encourages us to look beyond the traditional U.S.-centric view.
Absolutely. He spends a good chunk of this report exploring opportunities in emerging markets.
It's so easy to get caught up in what's happening in our own backyard and forget that there's a whole world of possibilities out there.
He highlights Mexico as a particularly intriguing case study. It's experiencing some bullish momentum in its stock market, despite the looming trade war with the U.S.
That seems counterintuitive. You'd think the threat of tariffs would scare investors away.
You would think. But Bill digs deeper and explains that certain sectors within Mexico might actually benefit from the changing dynamics.
Interesting.
He also points out that the Mexican central bank has been taking steps to strengthen the country's financial position, which is boosting investor confidence.
So there's always more to the story than just the headlines.
Absolutely.
You have to understand the nuances of specific markets and how they're responding to global events.
Exactly.
And that's how you find opportunities that others might miss.
That's the key.
Now I have to ask, about Bill's take on junior mining prospecting companies.
Ah, yes.
He even mentions attending the PDA mining convention in Toronto. In this report,
Right.
it sounds like he's really passionate about this sector.
He is. He sees these exploration stage companies as potential high-reward opportunities, albeit with significant risks.
So not for the faint of heart.
Definitely not.
Right.
But for those with a higher risk tolerance, these companies offer the potential for massive returns if they strike it rich. He highlights companies operating in promising regions, like the Athabasca Basin in Canada, known for its uranium deposits, and Guyana in South America, which is experiencing a gold rush.
It's like an adventure.
It does.
Okay, so we've talked about energy, precious metals, emerging markets, even junior mining companies. What else does Bill cover in this report?
Well, he shifts gears a bit and delves into the world of portfolio management and investment strategies.
Okay.
He explores different approaches, from value investing to growth investing, and even touches on the complexities of options trading.
There are so many different ways to approach the market.
Bill does a great job of explaining the key concepts behind each strategy, highlighting both the potential benefits and the risks involved.
I appreciate that he takes that approach. It's about education and empowerment, not about pushing a specific agenda.
Exactly. And of course, he reiterates his preference for carefully selecting individual stocks after thorough research.
Remember the peach and fish analogy?
Exactly.
You got to inspect those investments carefully before you buy.
Due diligence is key.
But it's not just about specific investments. He also delves into broader portfolio management concepts, like diversification and risk management.
Absolutely.
He emphasizes the importance of understanding how different asset classes behave and how they can be combined to create a portfolio that aligns with your overall goals.
Your own personal goal.
It's about building a holistic investment strategy, not just chasing the latest hot stock tip.
Precisely.
Now, there's one more concept that I think is crucial to understanding Bill's investment philosophy.
Okay, what's that?
The distinction between good companies and good stocks.
He talks about that a lot.
A company with solid fundamentals might not necessarily be a good investment at a particular moment in time.
Yeah, that's right.
And vice versa.
Timing and valuation are just as important as the underlying quality of the company. A good company can be a bad stock if it's overvalued.
It's a reminder that investing is not just about picking the right companies. It's also about buying them at the right price.
You got it.
He brings up the example of those underperforming mutual funds in 2024.
Right.
Those fund managers might have been investing in good companies.
Yeah.
But their poor timing and stock selection ultimately led to disappointing returns. It's a cautionary tale for anyone who thinks they can just blindly follow the experts.
That's right.
You have to do your own research, make your own informed decisions.
Absolutely.
There's one more thing I wanted to mention before we wrap up this section.
Okay.
Bill talks about this concept of a humongous bank and broker.
Right. HB&B.
HB&B for short. What exactly does he mean by that?
It's not a specific company, but rather a term he uses to represent the collective force of large financial institutions that often exert a disproportionate influence on the markets.
So the big banks, brokerage firms, asset managers.
That control trillions of dollars and can move markets with their actions.
So it's more of a symbolic representation of this concentrated power within the financial system.
Exactly. And he's often critical of the role these institutions play, arguing that their interests aren't always aligned with those of individual investors.
So he encourages us to be aware of their influence and not be swayed by their narratives.
Think for yourself. Be an independent thinker.
Okay, I think we've covered a lot of ground in this section. We delved into specific sectors, explored emerging markets, discussed portfolio management strategies, and even touched on the concept of HB&B.
Oh, we did.
Ready to move on to the final part.
Let's do it. There are still some key takeaways and a final thought-provoking question from Bill that I think will really resonate with our listeners.
Welcome back. We've been on quite a journey with this Navigator Report 8, exploring everything from geopolitical tensions to emerging market opportunities.
Bill really packed this report with insights.
Yeah, it's not just market analysis. It's about giving investors a broader understanding of the world and how to think critically about the information that they encounter.
It really is.
You know what really struck me is how he emphasizes the importance of critical thinking and objectivity. Not just when it comes to investing.
Right. He argues that those same skills, like questioning assumptions, seeking evidence, and not being swayed by emotional biases, are crucial for just navigating life in general.
It's about being discerning consumers of information, especially in this age of information overload and fake news.
Absolutely. It's everywhere.
He challenges us to kind of develop that healthy skepticism and think for ourselves. Instead of blindly accepting what we're told.
Think for yourself.
Taking ownership of our decisions and shaping our own destinies, not just reacting to whatever information comes our way.
Be proactive.
And I think that's what makes Bill's work so compelling. You know, he doesn't just provide financial analysis. He empowers individuals to think critically and make informed decisions in all aspects of their lives.
I agree.
All right, so as we wrap up our deep dive into Navigator Report 8, let's distill some key takeaways for our listeners.
Okay, sounds good.
What are the most important things to remember?
Well, first and foremost, knowledge is power. The more you understand about the markets, the economy, and the world around you, the better equipped you'll be to navigate all the complexities and achieve your financial goals.
Absolutely. Second, independent thinking is crucial. Don't blindly follow the herd or trust the so-called experts. Do your own research, question assumptions, and make your own decisions.
Right. We've seen time and time again how following the crowd can lead to disastrous results.
Exactly. Third, diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographies to mitigate risk and build a more resilient portfolio. And finally, remember that investing is a marathon, not a sprint. Stay focused on your long-term goals. Be patient. Don't get discouraged by short-term fluctuations in the market.
Sometimes the greatest opportunities come during periods of uncertainty.
Couldn't agree more. And of course, we can't forget to thank Bill Cara once again for his incredible work. This Navigator Report 8 is a must-read for any serious investor who wants to stay ahead of the curve.
Absolutely.
Be sure to check out his website, billcara.com, for more of his brilliant analysis and insights.
He consistently delivers high-quality research that empowers individuals to take control of their financial futures.
So as we conclude our deep dive, we'll leave you with one final thought-provoking question from Bill Cara.
All right, hit us with it.
Given the current geopolitical and economic climate, what steps can you take today to protect your investments and capitalize on emerging opportunities?
That's a great question.
It is a question worth pondering. Remember, the key to success, both in the markets and in life, lies in continuous learning, critical thinking, and the courage to chart your own course.
Very well said.
Until next time.
Happy investing, everyone.